Hello everyone, welcome to my channel Commerce World. In this video, we are going to learn about the national income accounting from subject economics. So from economics, we are learning about the national income accounting. To know about the national income accounting, first of all, we have to understand the 8 aggregates of national income accounting. In order to understand about the 8 aggregates of national income accounting, I have divided that 8 aggregates into 4 elements. The 4 elements are: number 1, gross and net. Number 2, domestic and national. Number 3, product. Number 4 is market price and factor cost. So the 4 elements are gross and net, domestic and national, product, and the 4th one is market price and factor cost. So with the help of these 4 elements, let us derive the 8 aggregates of national income accounting. So what I do, I'll just choose the first one as G, then D, then P, then MP. Then with the same formula, I'll just connect with the FC. In this way, MP, FC, MP, FC, MP, FC, MP, FC. In this form, we are going to derive the 8 aggregates of national income accounting. So let us see the first aggregate of national income accounting. So the first aggregate of national income accounting is GDP MP. So gross domestic product at market price. Again, copy the same thing. Second aggregate, GDP as it is, replace the word MP into FC. So the second aggregate is GDP FC. The first aggregate is GDP MP. Let's go for the third aggregate of national income accounting. The third aggregate of national income accounting is gross national product at market price. So I have replaced the word domestic into national. The third aggregate is gross national product at market price. Again, copy the same third aggregate. At the place of MP, you have to replace as FC. That is gross national product at factor cost. That we understood the 4 aggregates. The 4 aggregates are GDP MP, GDP FC, GNP MP, GNP FC. Now let us go for another 4 aggregates of national income accounting. Now I am changing the word from gross and shifting to net. Okay. So let us start with the 5th aggregate, that is net domestic product at market price, NDP MP. Okay. And copy the same 5th aggregate for the 6th one, that is NDP. At the place of MP, we have to replace as what? FC. So net domestic product at factor cost. Okay. Next, let us move for the 7th aggregate of national income accounting as well as the 8th aggregate of national income accounting. Now, the word domestic, I have to replace as national. So, NNP at market price, that is net national product at market price. Again, NNP as it is, at the place of MP, I have to replace as FC. That is net national product at factor cost. Okay. So, total 8 aggregates are GDP MP, GDP FC, GNP MP, GNP FC, NDP MP, NDP FC, NNP MP, NNP FC. So, among these, 2 aggregates are such a way that one aggregate is said to be a domestic income and another aggregate is said to be a national income. So, out of these 8, which aggregate is a domestic income and which aggregate is a national income, I'll tell you at the end of this video. The first aggregate of national income accounting is GDP MP, that is gross domestic product at market price. First, let us understand the meaning, then we'll go for the formula. The meaning of gross domestic product at market price refers to the gross value of all goods and services produced within the domestic territory of our country during one particular year. And the formula to find the GDP MP is C plus I plus G plus X minus M. C plus I plus G plus X minus M. C stands for consumption expenditure, I stands for investment expenditure, G stands for government expenditure, X are the exports and the M are the imports. About the second parameter of, second aggregate of national income accounting, that is GDP FC. Gross domestic product at factor cost. Just now we understood about GDP MP. Now let us know about the GDP FC formula. How to derive the formula for GDP FC? To derive the formula, I have taken 3 things, technical parameters here. Parameter number 1, that is net gross to net. In order to go from gross to net, you need to less the depreciation. In order to move from net to gross, you need to add the depreciation. You can see very clearly here. From gross to net, we need to go. We have to deduct the depreciation. From net to gross, we need to add the depreciation. And the second technical parameter is from national to domestic. In order to move from the national to domestic, we need to minus NFIA, that is net factor income from abroad. In order to go from domestic to national, we need to add NFIA, net factor income from abroad. So here minus NFIA, there plus NFIA. The third technical parameter is market price and factor cost. So to move from market price to factor cost, we need to minus net indirect tax, that is NIT. In order to move from factor cost to market price, we need to add NIT, net indirect tax. Okay. The formula to find the second parameter, NDPFC. That is, first I'll take into account GDPMP. Okay. So in GDPMP, what I need to minus or what I need to add, there is a, technically we need to derive this formula with the help of these technical parameters. Okay. So GDPFC, to find this formula, I've taken into account GDPMP. Now compare from right hand side to left hand side. The first alphabet, G to G, no change. D to D, no change. P to P, no change. From MP to FC, I need to go from market price to what? Factor cost. Just see here. In order to move from market price to factor cost, I need to minus the net indirect taxes. So mention that minus NIT, it becomes the formula to find GDPFC. So GDPFC is equals to GDPMP minus net indirect tax. Now let me tell you about the third aggregate of national income accounting, that is GNPMP. GNPMP, gross national product at market price. Even to derive this formula, first I will take into account GDPMP. So let us mention that GDPMP. Now with the help of these technical parameters, let us understand what to minus and what to less. Okay. To know about the GNPMP, first I have taken into account GDPMP. Now compare G to G, no change. Domestic to national. I have to go from domestic to national. Fine. So in order to move from domestic to national, see the technical parameter, to move from domestic to national, I need to add NFIA. That is plus net factor income from abroad. If you plus net factor income from abroad, it becomes the formula to find GNPMP. Let us move for the fourth aggregate. The fourth aggregate of the national income accounting is GNPFC. Okay. To know about the GNPFC, once again I'll take into account GDPMP. Okay. Take into account GDPMP. Now to understand what to minus and what to plus, we have to see these technical parameters. So G to G, no change. Domestic to national. I need to go from domestic to national. So similarly, the previous formula, what I have done, in order to move from domestic to national, I have added net factor income from abroad. Okay. Now you can add again plus NFIA. Okay. And then you have to go from market price to factor cost. To move from market price to factor cost, here in technically parameter, from market price to factor cost, I need to minus the NIT. So just mention that minus NIT, that becomes the formula to find GDPFC. So GDPFC is equals to GDPMP plus NFIA minus NIT. Now let us know about the fifth aggregate of the national income accounting, that is NDPMP, net domestic product at market price. So to derive the formula to find NDPMP, once again I'll take GDPMP. Okay, since I am going from gross to net. Okay, seeing this technical parameter, to move from gross to net, what I have to do? Just very simple. I need to minus the depreciation. Just put minus depreciation. It becomes the formula to find NDPMP. NDPMP is equals to GDPMP minus gross depreciation is the formula. And next, sixth aggregate, NDPFC, that is net domestic product at factor cost. In order to find this NDPFC, once again I take GDPMP. Okay, so GDPMP. Now you have to compare from RHS to LHS. G to N, from gross to net. What I supposed to do? I have to minus the depreciation. Command do minus depreciation over there. Then domestic is matching, no change in that. Product is also matching, no change in that. But MP to FC, I have to go from market price to factor cost. In order to move from market price to factor cost, I have to minus net indirect taxes. Just minus the net indirect taxes. It becomes a formula to find NDPFC. So NDPFC is equals to GDPMP. Okay, GDPMP minus depreciation minus net indirect taxes. The seventh aggregate of national income accounting is NNPMP. That is net national product market price. To derive the formula of net national product market price, again I'll take into account GDPMP. Okay, now I have to compare from GDPMP to NNPMP. G to N, I need to go from gross to net. Okay, so first what I have to do? Minus depreciation. Second, domestic to national. To move from domestic to national, I have to add, okay, NFIA. So add NFIA. So this is the formula to find net national product at market price. That is GDP-MP minus depreciation plus NFIA. Let's move for the last aggregate. The eighth aggregate of national income accounting is NNPFC. I told you already that one of the income out of these 8 aggregates is the national income. Exactly. The eighth aggregate, NNPFC itself is called as National Income of India. National Income Accounting. So to know about this National Income Accounting, NNPFC, the formula again I take into account GDP-MP. Okay. Now I have to go from gross to net. So I will minus depreciation. I have to go from domestic to national. So I will add NFIA plus NFIA. Then I have to go from market price to factor cost. So in order to move from market price to factor cost, I need to minus net indirect tax. So this is the formula to find the national income as well as net national product at factor cost. That is GDP-MP, okay, minus depreciation plus NFIA minus NIT. So these are all 8 aggregates of national income accounting. Let us understand these 8 aggregates of national income accounting with the help of numerical problem. Now I'm going to teach you one 6 marks problem from the state syllabus of PU board, and also the same question will be asked for the CBSE syllabus for 3 marks question. Okay, the question will be in this form. Given GDP-MP is 3000 crores, depreciation is 500 crores, NFIA is 1000 crores, and NIT is 100 crores. 4 values are already given in the question. GDP-MP we know depreciation, and we know NFIA, and we know the NIT. Fine. So we all know that the first aggregate you can see very clearly on the screen, that is GDP-MP. And the formula to find the GDP-MP is C plus I plus G plus X minus M, which is already given how many crores? 3000 crores. So we got the first answer as 3000 crores. Let us move for the second aggregate, GDP-FC. You can see the formula on the screen. The GDP-FC formula is GDP-MP minus net indirect taxes. So GDP-MP take 3000 as it is. Okay. See in the question, what is the value of net indirect tax? It is 100 crores. So 3000 minus 100 crores, you'll get the answer 2900 crores. And the third aggregate of the national income accounting is GNP-MP. To find the GNP-MP, the formula is GDP-MP plus NFIA. Okay, gross domestic product market price plus net factor income from abroad. Since we know the values, take 3000 as it is minus, you need to add plus NFIA. So 3000 plus 1000, it becomes 4000 is the value for GNP-MP. And the fourth aggregate of the national income accounting is GNP-FC. And the formula to find the GNP-FC is GDP-MP plus NFIA minus NIT. You can see the formula on the screen. As according to the formula, you just add up less the items to get the answer. That is 3000 is the GDP plus NFIA 1000 minus net indirect tax is 100. So 3000 plus 1000, 4000 minus 100. The answer is 3900 for gross national product factor cost. Now let us go for the fifth aggregate of national income accounting. That is NDP-MP. To know about the NDP-MP, again the formula we should write as GDP-MP minus depreciation. It is already appearing on the screen. GDP-MP minus depreciation. We know the value of GDP-MP is 3000. Minus depreciation given in the question minus 500, you'll get the answer 2500. And next is NDP-FC, net to domestic product at factor cost. And the formula to find the net to domestic product factor cost is GDP-MP minus depreciation minus NIT. So 3000 minus 500 minus 100, we get the answer 2400. And next is NNP-MP, net to national product at market price. And the formula to find the net to national product market price is GDP-MP minus depreciation plus NFIA. So do as it is, 3000 minus 500 plus 1000, you'll get the answer 3500. And the last aggregate is NNP-FC, that is national income. To know about the national income, the formula is GDP-MP minus depreciation plus NFIA minus NIT. So 3000 minus 500 plus 1000 minus 100, we get the answer 3400. Thank you so much for watching my video. Thank you.